Most people think stocks are a gamble. In fact, one of my friends asked me whether I think they should invest in the Kenya Pipeline IPO or initial public offering that is currently ongoing. Now, I will not tell you whether to invest or not because that depends on a number of things. What I will do is that I'll break it down in terms of what it means, what it could mean in the long run, what is likely to happen, and possibly the fundamentals of the stock market. What is an IPO and how it works, how it might affect your investment. But the bottom line is stocks are not a bad idea. Actually, it's a ticket to owning some of the best performing companies in the world. Now, what is an IPO? To answer the question in another way, when Safaricom did an IPO years ago, many people went in, some even took loans to buy into the IPO. Now, the unfortunate thing is that after the IPO, the prices came down significantly. Some people panicked, sold everything, burnt their fingers, and swore never to invest in shares again. Buying shares is not a bad idea. You just didn't understand how they work. This time, I don't want you to make that mistake again. If you decide to buy Kenya Pipeline shares, I want you to buy them informed. IPO stands for Initial Public Offering. Have you ever looked at a company and possibly wished you were there at the beginning of that company? Well, an IPO gives you that moment where you and I, people who were never there when the company began, are given an opportunity to invest in that company or to own a portion of that company. The company may want to expand, they may want to invest more, but because of the lack of capital, they go out there to the public and ask people to invest in the company. Bring in some money so that they can invest in their infrastructure to make more money. So that is what an IPO is. It gives outsiders the opportunity to own the company. And of course, the company benefits with more investments and therefore more revenue. Think of it like this. You have a small bakery. You are selling cakes and you realize that your demand is growing. You are able to produce about 20 pieces of cakes every day, but you realize that the demand is higher, but you don't have the money. You look for someone out there who is going to bring in the capital and then they are going to share into your profits. Instead of just doing 20 cakes every day, someone else comes in, brings in their money that allows you to do 30 or 40 pieces every day. Now that is what an IPO does. It allows outsiders to come into the business, own part of the business together with you so that you can do more. Now, Kenya Pipeline, for instance, may feel it wants to expand its infrastructure, buy new equipment, it wants to do other things that it has no money for. So it does an IPO to allow more investors to come in. They get the capital to expand and you get the opportunity to own the company. But here is the articulate truth. Not all IPOs are a gold mine. Some companies do an IPO because they want to fly, they want to grow, they want to expand. But other companies will do an IPO because the company is not doing so well. So they want to cash out and leave you holding the company while they are gone. So you have to read between the lines. You have to understand the company. You have to look at the fundamentals. How has the company been doing in the last couple of years? What do they want to do with the new investment? So you have to look past the glittering marketing and understand the prospectus. What do they need the money for? What are they planning to invest in? Has the company been profitable in the recent past? How are their books? And most importantly, what are they planning to do with the new investment? Kenya Pipeline, for instance, how have they been doing in the last couple of years? They have been making profits, of course, but you have to understand more, dig deeper. How is their corporate governance? Who is at the helm? How do they carry out their activities? What is likely to affect their business in the future? Don't just be driven by the emotions and the fear of missing out. That is what happened in the Safaricom IPO. It didn't end up very well. Today, Safaricom is doing very well. An IPO could be a wealth builder or it could be a trap. The difference is the due diligence that you get to do. Remember to subscribe so that you don't miss any part of the series, because I can guarantee you this will be a turnaround in your investment journey.